What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today we have Jay Biondo on from Trading Technologies. And today I want to talk to Jay about how level are the markets playing field right now. I think this is extremely important because a lot of people ask me about spoofing and how much of an impact that has on the futures markets. So today we're going to talk to Jay about what spoofing is and how the exchanges and companies like Trading Technologies have really done an amazing job at preventing these bad behaviors from entering the markets. We're also going to talk a little bit about TT Score, which is a very interesting tool available to traders on Trading Technologies. Remember, everybody, Futures Radio Show is sponsored by CME Group, and Micro Treasury Futures are now coming to CME. To learn more, go to activetrader.cmegroup.com. Futures Radio Show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 future symbol RTY and Micro E-mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Back in 15 seconds with Jay. Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tradingtechnologies.com. Jay, what's up, my friend?
Hey, Anthony. Nice to be here today.
Great to have you back on the show. Like I said in my intro, traders only care about a few things. How do I make money? How do I get better? And is the playing field level for me? And I think that the exchange, CME Group, and all the other futures exchanges, and a lot of the software companies like Trading Technologies have done an unbelievable job at pretty much removing bad behavior from futures markets. And I want to start off by asking you, how level is the playing field right now for futures traders?
Yeah, like you're saying, Anthony, there has been such a tremendous focus on things like spoofing over the last 5 to 10 years. There's no doubt to me that type of activity has been greatly reduced in the markets today. But that being said, there's no doubt in my mind that it actually still exists. And a couple of reasons for that are, one, you have people trading on U.S. markets from all over the world. And a lot of these people, maybe from some of the Asian locations or some other places around the world, they don't even really know what spoofing is or what it means. And so because of that, they may be still engaging in that type of activity. And I think that in the less liquid products in particular, maybe things like commodities or energy products, where it's easier to move markets than some of the more liquid products that are out there, like an E-mini or something along those lines. You can still see this activity happening on a fairly regular basis. But then ultimately, I think the other part of that is that some people just don't always know they're spoofing. It can be completely inadvertent. Even people here in the States, they might think that they are just doing their normal trading activity, but to a regulator, it may look like something completely different.
Yeah, and I think that's something that we need to address right away. That's one of the main reasons why I wanted to bring you on today is because a lot of traders send me in questions and say, what is spoofing, Anthony? I've heard about this. How much is it impacting the markets that we're trading? Explain to everybody what spoofing even is.
Yeah, so spoofing is essentially you're putting in orders that when you're putting in those orders, you intend to cancel them. So you're putting them in to essentially trick other market participants. And so a very basic vanilla type of a spoofing thing would be somebody puts large orders on one side of the market, they put some small orders on the other side, they get filled on those small orders, and then they cancel the large orders really quickly because they never really intended to get filled on those large orders. They were just using those to induce other market participants to get filled at better prices. So that is just a very vanilla basic type of a spoofing pattern, but there's a lot of different variations that come along with that. So layering, you can be layering the price ladder, layering the order book. You can be flipping the market back and forth and changing things back and forth. And there's all these different patterns that come along with spoofing, and the regulators, they don't have one set definition for the pattern they're looking for because it's an intent-based rule. So they're really just looking for a pattern, and then they go from there, and they'll investigate from that point. They've identified the pattern, they see something they don't like, and then they will investigate it from there.
Yeah, I think that is one of the issues with something like spoofing is that it doesn't have an exact definition. And I think that's why a lot of traders have been writing into me saying, what is it? And one thing I will say is that I've worked with the exchanges over the years. They don't want it. Okay. They do not want this at all. They want it gone. Obviously, they don't want to have people doing bad market behavior in there. So I think a lot of people right out of the gate say the exchanges don't even care. That's not true. I know that for certain. But the exchanges also can only do so much. When you have people like you with trading technologies, and TT has actually become so much more than just a trading platform. It's become a technology company in so many rights. But right there on the platform, you guys can actually tell people whether or not they're spoofing. Now, even though we say it's gray, it's not black and white, you can still do that. Explain what some people that are using this, what, because it's not black and white, let's say this, explain what trading technologies software would be recognizing to saying, hey, you're spoofing, stop it. Otherwise, you're going to have a problem.
Yeah, so every trade that you're engaging in, every order message, it's all being essentially processed by our surveillance system TT score. So if you're on a TT screen, that's just happening automatically and that's we process everybody's results on score. And all of that data is being measured in mathematical similarity to regulatory case data. What I mean by that is we basically take the data and then we do a mathematical similarity comparison to regulatory case data that we've trained our machine learning model with. Then we're just basically gauging that similarity to develop a score. The score is on a scale from 0 to 100, with a 100 meaning this activity has such a high degree of mathematical similarity to that regulatory case data that you need to look more closely at this, because whether or not you're doing this intentionally or not, the regulators are seeing this as well. And it looks so similar to something that they've investigated in the past that there's a really high degree of probability that you are going to be investigated for that activity. Now, the score is not making a legal statement. It's not saying this is definitively spoofing, criminal behavior has occurred here and you're instantly in trouble. That's not what we're trying to accomplish here. What we're trying to do is be a bomb sniffing dog. We're trying to say, look, there's an issue here that you need to be aware of. You better look more closely to make sure that you're not creating the appearance of spoofing. And if necessary, you may need to change your strategy because it may just be so similar that you're putting yourself at risk.
Yeah, I credit a lot of this. I remember when Chris Giancarlo, former CFTC, head of CFTC, he really came in. And I remember just working with so many of the reg techs, working with the software people. I'm sure you've met him and probably worked with them over the years and how much he worked with the exchange. It's amazing to me how much progress has been done, I think, since Chris has come on. I think he was, like I said, I think he was such a great leader in our industry that it's eliminated so much of it. And then it started with education. It started with people like TT and just bringing reg tech to the forefront in a lot of these conferences and letting traders out there really understand. And I know that because TT has so many big traders on there, that your product in its own right has probably prevented so much of it just because of something like this. Because like you said, some of these big traders, and I remember when I was scalping S&Ps, I was 500 a clip a lot of the times, and I would pull a lot of those orders because the minute I got a little nervous, I'd be out of them. And you don't recognize that what you're actually doing now was actually looked at as illegally. And I know when you get some of these big prop firms, a lot of these, bigger institutions, they need to really be on top of that. And that's what creates the level playing field for the traders out there is technology like this, and with the exchanges and with the CFTC all working together. You mentioned something else I think we should talk a little bit more about is layering.
Mm-hmm.
Explain that, because this is something else I don't think people know too much about.
Yeah, so layering, you may have on one side of the book, you may have several orders resting in the order book at multiple price levels. So let's just say you have order quantities resting at the top 5 ticks on the bid, for example. Now, where you may get into an issue there is if those order quantities are a significant percentage of those price levels. And then all of a sudden you put some smaller orders in on the opposite side of the market. Okay. Because at that point, it's starting to appear like you're just putting that book pressure on the bid to get filled on those offer orders. And at that point, also, the regulators don't necessarily care how fast you're canceling those orders. They're more interested in the fact that you're just not getting a lot of fills on those larger orders, that the predominant amount of fills you're getting are on those smaller offer orders on the opposite side of the market. So they're concerned that you're basically creating false buying demand, and then eventually you may cancel them, but they're going to put a lot of less emphasis on your order duration at that point. You can vindicate yourself sometimes by saying, I'm leaving my orders in the market for so long, they're exposed to so much risk, that, but now it may look instead like you're dominating the market and you're pushing the market on purpose and intentionally with basically orders that you never intend to really get filled on.
Is there a percentage of orders being filled versus being orders worked that would be looked frowned upon, I should say?
Yeah, they're never going to give you that exact bright line percentage or anything like that. But I think that if this is something that's happening in particular products at particular times of day, potentially, or if your fill ratios on the smaller orders are just magnitudes larger than the fills that you're getting on those, if you're just getting so many more fills on the smaller orders compared to the larger orders, the preponderance of the evidence this after they do the statistical analysis, they're going to say there's just the fact that you're saying you didn't that there was no intent to spoof here starts to become a weaker argument in a major way.
Got it. No, thank you for sharing that with us, and it just gives me such a better understanding. Even myself, over the years, I've talked with so many people about it, and you need to constantly be reminded about how these things work. And as a trader, it's important how you implement your strategy based upon the rules of the exchanges and the CFTC and how that all comes into play. I want to take a quick break, but when I come back, I want to talk to you about who's really breaking more of the rules. Is it the HFTs, the algos, or the regular traders?
Sure.
Where are we with all of that? So hang tight, everybody. We'll be back in 30 seconds.
Replace your exchange with TradeStation Crypto. Dealing with multiple exchanges is complicated and it takes time, except with TradeStation Crypto. Because we are not an exchange, we are a broker. You have access to multiple pools of liquidity, all in one platform, in one account, one way. Trade crypto your way, plus earn interest on your eligible cryptocurrencies. Get started in one click.
All right, everybody, we're back with Jay. Jay, thank you so much for educating us thus far in the conversation. I really am enjoying this, and I appreciate your time.
My pleasure.
I want to talk a little bit more about the HFTs and the algos versus the point and click traders, because everybody will be first to say this is the HFTs that do this is the algos that do. I don't know this. I'm curious to see who does it more. So is the HFTs causing a lot of these, we'll say, unfavorable behaviors in the markets, or is it more regular traders doing this?
Yeah, I think initially the HFT traders were more under scrutiny because their cancellation rates are so high. And like I was saying, spoofing by definition is looking at orders you're intending to cancel when you're submitting them. So people naturally thought, oh, look at those cancellation rates. They're not intending to get filled on all these orders that they're sending in nanoseconds. But in the end, really, the regulators would look at the code and they'd say they actually are. They're in the code. They are looking at a variety of signals that are actually recorded in the code here saying, this is why you cancel an order. This is why the algo makes that decision at that time. And it's easier for them to actually vindicate themselves by pointing to the code. But when it comes to a manual trade, it's different. You may actually be more at risk of being under investigation for spoofing these days when you're a manual trader, because they will go and ask you about trades you did in the past, and you will have to explain to the regulator why you made the decisions that you made at that time. And that can be very challenging to think back to that far amount of time in the past and accurately remember why you made that particular cancellation at that time, when everybody should have the right to change their mind when they're trading. It becomes a really big lift to vindicate yourself and explain why you intended to get filled on those orders and that you weren't, in fact, just using them to influence other market participants. I would say today the bigger risk is actually for manual traders and click traders, and especially when they start to use some actual size in their trading and they're putting a lot of risk in the market, they're going to potentially stand out, and there's a chance that you have a regulator looking at what.
I was thinking you were going to go there with this because I just think back to how much I talk to a lot of the HFT people in our space, and they spend so much time now making sure they're compliant. Nobody wants to get fined. Nobody wants to get shut down. There's a set of rules that are out there, and they're all trying to go by that set of rules. Versus, I think initially when electronic trading started, it was a lot more of the Wild West. Nobody knew we didn't know what rules needed to be implemented. Time needed to take its course. And coming from a pit to the screen, it's very different. That's why I say to now the playing field has never been more level than it is today, and it's just only going to get better and better. And when you think about it, knowing that the actual point and click traders now are the ones who are actually having this issue more than the HFTs, it's really interesting to me because I just think they're not educated on it. It just goes back to why I wanted to do this show today. And it's okay. I think everyone understands what spoofing is now, even though we say it's not black and white, we understand, but everyone mostly gets it. Layering. What else out there can the bigger traders, even the smaller traders right now, recognize this? Because as you build a strategy, you might get bigger and bigger, that you should be on the watch out for, that maybe TT Score is actually looking at and saying, hey, this isn't spoofing or layering, but it's this, that you can get in trouble for that. What are some other things we're missing from this conversation?
Yeah, I think, and I mentioned it is flipping, or it can be also described as like changing bias. And the CME had a big rule release about this, the CME Rule 575, where they said that if you are going to have essentially a large order in the market, and then you like change your mind and want to go the opposite direction. So let's say you have a big bid order in the market, but then you decide you want to sell. If you cancel that large bid and then put a large offer order in the opposites and turn the market, that can be viewed as what they call flipping. Okay. And there's like a variety of things that they look at when they see those big changes of direction, these big market flips. But really one of the most critical things to keep in mind for this particular pattern is if you're using self-match prevention functionality, okay? And to avoid doing that, it's okay if you have a big bid in and it's resting and you cancel it and then put in a new large offer order. That they can't, you have to be able to change direction and change your mind, change your bias. But if you use self-match prevention functionality to do this instantaneously, then that will be viewed as a potential violation of the rules, because they will say that you never really intended to get filled on that initial bid, because you used the offer order to instantaneously cancel the bid with self-match prevention functionality by putting them in at the same price and then getting filled by everybody who had lined up behind you on the bid. So you're essentially trapping those other market participants there with that fake bid order at first.
You know, that's really interesting because, like I said, I was a pretty big scalper for a long period of time. And I could tell you that there's a couple of times I'd have 10 lots or 25 lots later, and all of a sudden I just see them coming. And sometimes I'm like, oh my gosh, I'm going to get filled on these. I don't even want them. And I had them within 5 ticks, and they were all right there. I'm sitting there going, boom, sell 250 or something like that. And a lot of times I'd have to really look to see that I get filled at the same time. You can't turn and cancel that fast. And I could see this being an issue I'm not scalping like that anymore, so it doesn't happen to me, but I could see how that could be a big issue for some of these bigger traders that are putting a lot of orders in the books. And all of a sudden, let's just say an announcement comes out, or we don't have these Trump tweets anymore, but let's just say that happens and you're going, oh my gosh, bang. So once again, does it come down to a percentage? Like, how do they actually gauge? Because the one thing I don't love about a lot of this stuff that we're talking about, it isn't black and white, but we need to know it to make sure that we're preventing it. We're not doing this stuff without at least knowing some guidelines, we'll call them.
Yeah, I think a broken clock can be right twice a day. And if it's a one-off or it's happening to you just on occasion where that scenario unfolds, where you had to change the bias, and then you can probably show exactly at that time that you were looking at a tweet or at a news event, but you might be able to actually show the signal that you were looking at when you made that. Or maybe it's a correlated product. And as long as you can keep in mind why you did some of those things at that time, you're probably going to be okay. They may ask about it, but at least you have the ability to explain your actions. Now, if it starts to happen so much where it looks like you're just pushing the market, bullying the market, it's happening all the time. You're always flipping the market up and down and back and forth to the point where it's just maybe creating volatility that wouldn't be there if it wasn't for you and the size of your orders. That's when they're going to definitely crack down on that type of behavior.
Yeah. You got to be pretty big to do that in a lot of these markets these
Yeah.
days. And a lot of risk even involved in that too. There's not really, I see a lot of upside for someone even to doing that. There always could be an underlying reason, but that's good to know. Is there anything else, Jay, before I let you go today?
I would just say traders don't necessarily have to wait to find this information out from their compliance officer or from an investigation. If they're using the TT platform, they do have access to TT score. Like I mentioned, there is a score, so you don't need to know how to tune parameters or even really know much about compliance. You just get a score, and if it's high, you need to look at that. And then you have people like myself who can help you with that, and we're available. So I would just say it's there, and they can take advantage of it at a much lesser cost than having to go through investigations and paying attorneys' fees. And
Totally.
then your profits are probably they're not going to stay with you for very long when that happens.
I know many of my big trader friends that are still scalping a lot, and a lot of prop groups that I know that go work with you, and TT scores is amazing. And it's just good to know that there's software out there that even has this. TT always sets trends. I've talked about this a lot. I started using TT in 99, and they were the first people to have the dome, and just so many trends you guys have set in terms of technology on a front end for traders. So traders out there, obviously, definitely go and check it out. And they just go tradingtechnologies.com.
That's right.
And of course, you guys can check them out on Twitter as well. Jay, I got to tell you, thank you so much for educating us today. It's such an important conversation that I think I need to do more of these, but it is interesting just hearing how far we've come, getting a refresher on the importance of knowing these rules. And knowing that a company like TT, as far as I know, I don't think anyone else even has software to do that.
That's right. We're the only front end that offers it, so we're breaking some ground there.
Yeah, that's awesome.
Yeah.
Jay, thank you again so much for coming on the show today.
That was great. Thanks a lot, Anthony. Thank you for having me.
Of course, anytime. Traders, we're done for today. I'll see you guys next time. Cheers. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.